How's it going, everybody? Happy Wednesday. Welcome to the Hot Corner Live Strategy Session. I'm your host, the Director of Research here at All Star Charts, Steve Strazza. Let's dive right in. So nothing we discuss here today constitutes a solicitation to buy or sell any security solely for informational purposes, not to be construed as investment advice. For more on our disclaimer, you can visit allstarcharts.com/terms. So I think to start today, talk about some current events. We talked a lot about Elon Musk last year when he was battling Twitter for control of the company. He did eventually, buy it outright, take them private. He's been running it now since, around this time last year, a little bit later. Actually, after court, it was probably late summer. Either way, he's stepping down now, giving away the CEO position. I think somebody who was previously at NBC or Comcast. So that'll be interesting. They had their shareholder meeting yesterday. They had earnings this week. This is the Tesla chart. Always activity in a stock like Tesla. Really, all the big cap tech names from over in Washington. Quite popular among the Congress people. Makes sense, right? A lot of big government contract subsidies. They work closely with these companies, the Teslas and Amazons of the world. But yeah, I mean, these politicians buy the stocks that they hear about and talk about at the meetings that they sit in on, right? And participate in. So that makes sense. Anyway, I thought a lot of Elon's comments yesterday were really interesting. I mean, he is just, whatever you think about the man, just really incredible to listen to. He's brilliant. He's very calculated with his words, even though he is also, brutally honest about his thoughts and opinions. But I think that's refreshing. So I always like listening to him. He takes some long pauses before he answers certain questions, really thinks through things. He's a big thinker. So it's always interesting to hear his perspective on different things. And he really did a lovely job at that. He shared a lot yesterday. We'll talk about some of the highlights, but really stood out was seems to be making quite a good amount of enemies over in Silicon Valley, which is always interesting. So, he talks about OpenAI, where he invested, I think, originally like $50 million in. And my doc here. And he said OpenAI wouldn't exist without me, which I thought was very funny. Oops, sorry. Technical difficulties, opening a doc here. So, he said the company wouldn't exist without him, but when he made that investment, he didn't take any sort of governance or control over the company. So he seems a little bit frustrated about, the path they've taken since. Did get that big investment from Microsoft. So then Elon went on to talk about, his concerns with how Microsoft, might have too much control over ChatGPT right now. And then Satya Nadella came out and kind of disagreed with that and responded this morning. So that was interesting. He also talked about Larry Page, co-founder of Google, and their relationship, which has soured apparently over AI. That was interesting. Just some other things quickly. He talked about the Fed, how they operate on stale data. Said they were slow to hike rates. They'll be slow to lower them. Doesn't like working from home. I thought that was interesting. The layoffs at Twitter, they talked a lot about. It seems like he kind of paved the path for other companies on Silicon Valley to make similar layoffs. Said there's a strong chance AI makes life better, but some chance it goes horribly wrong. He thinks Tesla will have a ChatGPT moment in the next few years, thinking that we'll see autonomous driving by the end of the year, and then that will become a massive trend in the very near future. Regardless, and we'll talk more about AI and big cap tech. A lot of these stocks are working. Much of the conversation yesterday and why I wanted to talk to you guys about it at the top of this call today focused around AI, right? And, I've shared my thoughts on AI from, big trend perspective on here before. It's really going to be about the mega cap tech names. It's your Amazons, your Microsofts, your Googles, maybe a Tesla, Apple, Microsoft. Those are the ones that are going to really benefit from this trend the most. NVIDIA, right? It's the big guys. I think the pure play AI stocks, that you can catch as a smaller mid cap and, earn outsized returns on over the next, 5-10 years, they're going to be few and far between. And I don't see really any right now. So, we'll be looking out for those and we'll talk about them, when we identify them. But for now, I think the best way to play this trend is through the big boys. And I would not be playing it through Tesla. This is a classic top here. Right. So I would say we executed just this classic distribution pattern when we broke down, looks like late last year. Then we came back, we retested the breakdown level right here called neckline. And now we're moving lower off it. This is another way to look at it. All right, we've retraced more than 62% now of the advance off of the COVID lows. And it looks like now we're putting in a failed retest, from below of this breakdown level. All right, so 172, even as far up to 197. There's a lot of price memory here, a lot of overhead supply. Looks like we're not quite getting through there, even with all of the, the earnings from Tesla and the shareholder meeting and the interview yesterday, not getting the bullish price action that we would have needed to see. So with all that said about AI, we want to focus on other big cap tech, big cap growth names. Here's one of them. Microsoft, Apple, Nvidia, these stocks keep working. We kind of missed the train on Microsoft here. It's really this, 290 and change level, those August highs. Maybe it's a buy on weakness setup now. Google, really like, right? 110 was that level. Well on our way. I think we'll feed the ducks up here around 125, see if we can work through this little overhead supply zone. And if and when we do, this thing's going back to 150. I think more and more of these big cap tech stocks really look poised to put in a run back to the all-time highs. So that's where our price targets are going to be moving in the future. Here's communications, right? So at the index level, I think we're really getting these breakouts. Let me check the chart live here today. This doesn't have today's candle in it. Huge candles today from tech and communications. Big day for just the entire market. Love to see it, especially with these bases looking the way they are. NASDAQ already led to fresh highs last week, and now it's looking like it's going to take out those August highs. Communications and tech are resolving higher from these bases. We got tech at new 52-week highs here. We like tech at the index level above 152, right? Those former highs, 176, where we're going. And look, the leadership is there, right? This is tech on a relative basis. The market continues to tell us that these tech stocks are where we want to be, right? Our best options trades of the year, our best, equity trades of the year, just continue to come out and turn out to be these big cap growth names, big cap tech names. Now you're seeing the breakout on relative terms. Continues to work. We don't want to get cute and, expect a trend that is, in full force to end before it's ending, right? When it does end, we'll know and we'll be out with tight stops. But for now, this is where we want to be. We want to keep going back to the well and focusing on what's working. In other news, we had a big one today. Did you guys see the morning note? Got a big, and let me open up the chat here, guys. Sorry. Big filing from none other than Mr. Warren Buffett himself. We've been talking about it probably the past few weeks now, saying, are we going to get that filing from Uncle Warren now that we're back below 60? Hold on one second. All right, so we got it. We got it last night. 125 million. Threw it onto our list of his buys dating all the way back to March of last year. As you can see, he's not coming out swinging like he was in Q1 and Q2 of last year, where the purchases were in the billions or close to a billion, 500 million. Now the last few, 200 million, 125 million. I think he's slowing down how much he's going to acquire. I talked about it on, the morning show this morning with JC. At the shareholder meeting just last week, he was asked, because obviously we're not the only ones wondering this, he was asked if he was looking to take full control over Occidental. And, it was no. Clear no was the response there. They have FERC approval for 50%. With this most recent purchase, I think it puts them around, let me double check, around 33%. They own a third of outstanding shares. Their stake is about 16 billion now. They own about 300 million shares, including the 84 million in warrants. It's about 900 million shares outstanding. So they could move from 33% to 50% ownership, right? But just building the position that they currently have, they've been able to support the stock over and over and over again at the 60 level. But what we haven't seen is a nice rally higher towards our price targets yet, right? So is this a top, or does Warren keep on coming out supporting it, in this Berkshire put here in the Buffett zone, as we like to call it, continues to defend our risk level, which is around 57.50. I think we're bouncing back above there comfortably today. Like I said, it's not just tech stocks today. We're seeing a bit in cyclicals too, which is good. Financials, industrials, energy, materials really leading the way today. So yeah, Oxy digging in, trading around 59. Listen, we can continue to buy it in this 57.50, 60 zone. I will never hate the idea of accumulating a position in a stock at the same place as Warren Buffett. And that's what we're really doing here. But at the same time, I do think we want to be cautious because this is the structure we're dealing with, right? This is the absolute trend. See a big topping pattern. These are the relative trends. This is Oxy versus the S&P. This is Oxy versus energy. Used to be a leader, not just within its group in energy, just 21, 22, but led the broader market, since 2020. That ended, middle of last year, and now we have some tops here. So these tops are likely to complete at the same time as the top on absolute terms. So we're looking at this for either a leading or coincident, indicator, supporting information, kind of trying to give us a heads up on where the absolute trend is going. So again, 57.50. If we're above there, Buffett's still coming out and supporting it. Buy all day. Maybe we do eventually get back to our target here of 88. But we're really just watching these cyclical stocks more closely. We got some short-term tops in place in the cyclical and value indexes, which we are monitoring closely. We are watching energy futures, copper, stuff like that. And the price action hasn't been great. So wait and see mode really for me for energy right now. Moving on to some new names. We continue to see earnings beats, positive earnings reports act as catalyst for breakouts of these rounding bottom formations, right? I'm trying to check if that was indeed the situation here with GXO. It looks like they had earnings earlier in May, but just a really nice breakout here and some great follow through today. Right now, this one's trading around $59, right? So already leaving on us. We would rather buy some weakness back towards the breakout level. Call it 55-ish, 55.50 even. Yeah, buy weakness back towards there. You could still have a nice risk reward getting in here. Like I said, trading around 59 today. CEO, 4-4 filer, winter of last year, late November. So we're targeting 77.50. Do love to see CEOs buying. Look at this one, bullish momentum regime now. The base is completed as long as, like I said, we're above this 55 level. And, you got the long-term moving average now flattened out, curling higher. We want to buy GXO above 55. We want to buy charts that look like this in general above mostly the August highs. Sometimes it's going to be those March highs from earlier this year. In this case, it's actually the February highs in GXO. But I want these patterns that look like these, to be ironed into all of our brains. These are the growth stocks, the tech stocks that are working these days. They're breaking out of these really, really just textbook reversal patterns. We have clean levels. Again, like I said, typically at these former highs. In this case for Vivint Smart Home, that level is 28. So you got highs from the first half of last year. Different stocks really bottomed at different times. I think we have the wrong ticker symbol here. It's not Vivint Smart Homes. This is Vontier Corporation. So my apologies. VNT. is the ticker symbol. So we like it long above 28 with a target of 37. CFO, Form 4 filer in this name, just back in March, about 2 months ago. Love to see the CFO buying. We're all also discussing that in the morning show today. Wendy's, fast food stocks just won't slow down. Wendy's has none other than Trian Fund. That's a Nelson Peltz, famous activist investor, very, great track record for the Trian Fund. Almost 20% stake, continue to increase it, albeit little by little. Listen, look at all the former highs in this one. Just what a key level this is. Polarity at its finest, and we continue to test the upper bounds of this range, absorb more and more of this overhead supply on every test. 24 is really that level, and we are right there again. When I think of the price action in this group at large, the fast food industry, it's hard not to really, really like this setup. So 24 is the level, trading at 23 and change today. So this is a buy on strength setup here. I think it'll end up looking the same way as a lot of its peers, whether it's Chipotle or Wingstop, already seeing plenty of nice breakouts to new highs in the fast food space. So Wendy's, we like it above 24, target of 35. GMS, not exactly a new one, but we do have new levels here. We're going to update it in rangefinder. This is just a cleaner base than what we had previously, and it's been a couple quarters now. So we're coming out with an update. So above 62, those former highs here, GMS looks great. We had a Form 4 filer, Coliseum Capital Partners. So we got an institution in this name, $8 million. That was last October. So 62, we're getting that breakout today too. Market's really hot today. Are getting a lot of breakouts. Keep getting alerts and dings going off on my phone and computer. So it's one of those days. More and more of these bases keep going. I get a little alert on my phone pretty much every time a base that I'm watching breaks out. And I can tell you, breadth is improving this week at least. And like I said, earnings has been the catalyst for a lot of it. That being said, some are failing too, and we'll talk about that. For us, we simply want to focus on the ones that are working, right? Buy the completed bases, not the ones that are failing. So above 62 GMS, target of 77.75. Corsair Gaming, I love their keyboards. I really like this base. I think I commented today, this is my favorite base out there right now. And here's the thing, I have a new favorite base every couple days because one breaks out, kind of leaves the station, and then I'm getting interested in other ones that are breaking out on earnings reports. So Corsair Gaming 1850, and they tell you it's 5 stocks propping up this market. That's not what I'm seeing. So 1850 in Corsair, that's the August highs. That's the year-to-date highs. We've tested this level 1, 2, 3, 4 times, and it also was support prior to the beginning of this base early last year before breaking down. Here you had this huge gap down on earnings right at this level, just reinforcing the importance of it. So there's so much price memory here. I absolutely love that. 1850, we got the breakout. Now we're pulling back a little bit to retest it from above. Absolutely love that. I am involved. Target 24, and you got Eagle Tree Capital in this one. I love it when there's institutional support in the name. I could just see it in the accumulation here. And look at that momentum machine, right? All of the things we're looking for. Oh, did I forget? The long-term moving average, right? Flattened and curling high. Oof, you guys know how I feel about this one. DraftKings, right? And yeah, guys, keep dropping questions in the chat. I see them, and I will get to them later. Joey, we are only going to talk about inside scoop stocks here, though. I'll do this for you today, but we try to keep it to the names in our universe. Listen, when I look at Adobe, Joe's asking about Adobe. I don't love it. Nope. Buy the ones that look like this, Joey, right? We want to buy the completed reversals. Adobe's not even making new short-term highs, right? Not there. That level for Adobe, and it's messy. I would really want it above those August highs, and that's not until about 450. Something more tactical, you do have some resistance there around 385. But Adobe just doesn't look as good as its peers. I can show you, more and more software stocks every day that are breaking out, and Adobe's not one of them. So for that reason, I'm not interested. DraftKings is one I'm definitely interested in. I'm going to tell you guys why, but you should probably be able to tell me why by now, just looking at this, right? All these charts that I like, they look the same. There's a reason for that. I love buying these reversal patterns. Let's talk about exactly why that is. DraftKings coming off a downtrend, 2021, 2022. Then it transitioned into a sideways trend here, right? Got a sideways trend all the way until earlier this year, just last month. We finally got the breakout, and then, a more decisive breakout on earnings, which we'll talk about. Here are those August highs. Look at momentum firmly in the bullish regime now, keeps tagging overbought. Overbought readings are characteristics of uptrends, not downtrends. So we got that, transition in the trend now. We're seeing confirmation in it. I'll show you what I'm looking for confirmation exactly in just a minute. But we transition from down to sideways to now, a new uptrend being underway. I think that holds true. And this is a valid reversal pattern as long as we hold above that 21 level. And I like buying leaders, right? I want to know that the stocks that I'm buying have a good chance of outperforming in the future. How do I feel comfortable that my stocks are going to outperform in the future? They're in an uptrend on a relative basis. And I love getting them as soon as they turn the corner from sideways trend to uptrend, right? And that's why I like these basing patterns so much, because I'm trying to catch them at the beginning of that new uptrend, right? To maximize my trading gains. So I'm seeing a reversal pattern print also on a relative basis. This is DraftKings versus the S&P 500. If I was to chart it relative to its peer group, something like ARK, it's pushing towards like new all-time highs, looks even better. But let's be fair, charted against the S&P 500, right? And good. Look, we got a reversal pattern in place. The bias is now higher. I'm expecting more outperformance from this stock in the future. So this all happened pretty much on earnings. Really, we got, I think, a pretty decisive base breakout here with the gap up, right? Because we retested here. This was last earnings report, right? Tested the upper bounds of the base. More corrective action, stayed in this range, right? Then we got the base breakout right ahead of earnings, retested, right, from above, and then gapped higher, really with a nice looking like breakaway gap on earnings. Love to see that. And look, what's going on right now in the stock? Just like we had that earnings gap, this is a much, more zoomed in look at the chart. Just like we had that earnings gap up back in Q1, we had another one just last week or the week before. Look at the corrective action. Then we chopped sideways and corrected for about a month's time. Then, 1-2 weeks now of corrective action following the latest earnings gap, right? So this could take time. We do want to be patient. We do want to respect our risk levels. I entered the stock today at 23. The big risk level for us is 21. I'm looking to complete my position. I only bought half of my position. Yesterday at 23. I'm looking to double my position size, build a full position at either 25, which is where I'll get confirmation, or 21. But let me just explain. I would much prefer, and it would be a higher probability outcome for me to win on this trade if I'm adding that position at a higher price and buying on strength at 25. I don't mind adding at 21, but I'm going to have a real tight stop at the pivot lows probably right here, around 20 if I do. Right? So the probability that I am stopped out of this trade, if I'm entering at 21, is far higher than if I'm buying on strength at 25. So that's how I'm playing it. Going to finish my position at either of these levels and then tight stop right down here below the breakout level. And we'll see how this one, works out. But a lot of these bases just continue to work. So I want to keep buying the ones that are resolving higher. So just to reiterate what we talked about today, C Limited is another name that's been on our list. I've been liking it, been watching this base form since last year. I've been watching this 200-day moving average, flatten out, start. It looks like it wants to curl higher. But look, like I said, earnings continues to act as the catalyst for these price breakouts. You're seeing it here with Corsair, like we just talked about. But for some, they're not acting as the catalyst. In fact, we're seeing bases fail at resistance. These charts are out there, just to be fair. I think they are far outnumbered by the charts like Corsair, which are breaking higher, right? But I just wanted to bring this along as an example of the ones we don't want to be buying, right? So, negative earnings reaction, I think down like 20% today or yesterday, really failing at these former highs. So it's still stuck in the range. It's still a sideways, messy trend. We only want to own something like C if we're above this 90 level. Right? We want to see this base complete, just like Corsair. We want to see this breakout hold, right? So let's buy the one up top, the ones that look like it, and let's stay away from and be patient with the ones on the bottom, ones that look like C Limited. All right, Joe, moving on to the questions. As you guys know, always hit us up, info@allstarcharts.com. Questions, comments, concerns, say hi. Joe, Steve, with the debt ceiling looming, would you want to add to positions? I can't make decisions in my life based on the debt ceiling and what these crazy politicians are doing, Joe. Just terrible. I think this is like a manufactured, news crisis with what's going on with the debt ceiling. I think, this seems to happen kind of every 5 or 10 years. I think the last time was 2011. It seems like it was more recent than that, but they always seem to figure it out, in the final hour, and then everything's fine. Our government can print as much money as it wants, so I never really understand what the real issue with this is. Our debt's already ballooning. I don't know if there's any saving that longer term, but no, Joe, just to answer your question, the price action continues to dictate that I should be looking for stocks to buy and not sell. And I'm talking about charts like this, right? Because the S&P is going to look like this soon. The NASDAQ's already starting to look like this, right? The leaders are resolving higher from these bases, not just beneath the surface, but now we're seeing at the index level, XLK and XLC, right? And then we have plenty of charts like this. You asked about Google too. I wouldn't add here. No, I would be patient, right? It's had a nice run. It's been really strong. You got that decisive breakout. I think the next place to add is, let's see how it reacts at 125. Feed the ducks or add there. Let's see what it's doing today, though. But no, Joe, to answer your question, environment where we're still looking to buy stocks, right? Because if we were reading the news to make our decisions on whether or not we're in an environment where we want to be buying or selling stocks, we would always be on the wrong side. So we just got to follow price, follow the charts. Right now, they continue to tell us it's a sea of green. I'm looking at my dashboard right now. Every sector is positive except for staples today. That's great. That's what you want to see if you're a stock market bull. So despite all the negative headlines, stocks continue to trend very well. Listen, S&P looks like it might even get that breakout today, up now 1.2% on the day. So no, we are still bullish, Joe. I think I got all the questions. Anything else? Guys, let me know. And that's all we got for today. So thank you, everyone, for joining. As always, we'll be right back here, same time, same place next week. I'll see you then.